Nick, what's going on?
What's going on, guys?
Oh,
No,
we're just doing a little bit of pre-market talk and looking at what we're going to be trading today. What are you looking at?
I was looking at some of the stuff you guys were talking about earlier. So I was doing my morning run, actually, going through all the tickers that we usually look at. And let's tackle Apple first. How about that?
yeah, no flying car.
No flying car, no chasing Apple. That was my motto yesterday. No fly, no chase.
No fly, no. If you would have heard the flying car, you'd been buying all hand over fist, though, right, Nick?
Probably not. No, I usually don't trade the events because you've heard me say that before. The events are kind of a coin flip. First of all, we don't know what they're going to say, and we don't know how the market's going to react to it. So it's kind of like a double coin flip, and I'd rather trade just after the event. Plus, the love for Apple. We were talking about that last week. The love for Apple came back, and so if everything is back to the way it was, it used to be that Apple runs up into an event and then sells off just after the event consistently.
Good point. Yeah, and that would have been the trade there yesterday.
Exactly. So I don't hate Apple. I hate its smugness. I don't like how they make fun of everything else, like it was not a challenge, even though they're losing the game kind of. Yet they still think that they're better than everybody else. Regardless, the stock itself, I'm not going to trade it until it splits to see how it behaves in a new neighborhood.
Right. That's exactly what and we know from a statistical standpoint, these things tend to still be strong ahead of the split and week afterwards. We've obviously had a ton of strength here. Really, the stock when they announced it was 530. So really, you're up 100 points since they've announced the 7-for-1 split. So a lot of that, you got to think is priced in already. But we do have another 3 or 4 full trading sessions here before it actually does split. So do you think
and that goes against it. If you pull up like the 5-day, 5-minute chart on it, it's just in a downward channel. Lower highs, lower lows. It's just not good. Maybe stabilize the last few hours. And if so, that's even worse because usually if you have lower highs and it's knocking on a floorboard, chances are that board is going to break more than it's going to bounce. So unless there's a major catalyst for the whole market, Apple's got challenges ahead of it price-wise.
Yeah, I agree.
Yeah.
I look at that Apple chart. I mean, the key day was Friday, and just looking at that thing, I wonder if people got caught because it did that run up to 644, and probably people were sitting fat and happy on those 640 calls, and then it turned around. That was really the significant day. I mean, that to me, from a technical, that I think Dennis, I think you mentioned that yesterday that was reversal. So we'll see. I mean, if you're looking to do a swing trade here, pick a top and Apple. I mean, you could use that 644 level. So you're not messing with the weeklies on this at all.
No, the weeklies. I'm out of all of the weeklies this week. I was telling my friends that this week is too violent to try to game it. You can make a lot of money, but you can lose a lot of money, and you have no recourse in the weeklies. If you have a credit spread, which is what I mainly do, it's going to blow up on you. If it does blow up on you, you have no recourse. You're done. The maximum loss is happening. You can't punt out, whatever, reset higher or lower. It's hard to game it. So what I'm doing is I'm playing them via leaps. If you have the margin to do it, like if you think everything is going to go down, why not sell a few calls out in 2015? You don't pay taxes on them if you hang on to them, if you put them high enough, and if you want to short it safely. Those the big dollar stocks move a lot in the leaps. It gives you. I remember I had Priceline at $5 or $6 in minutes. So if you have the margin, you can do it. Or give yourself some time. Do a June rather than this week. You can still do it. It's maybe a little less fast. A little slower, I should say, but a lot safer.
Let's talk about Priceline for a minute because that stock has been on a tear. Just the last few days, though, it looks like it's starting to run out of gas. But the double top in there 2 days ago, just under or just above the 1292 level, and then yesterday couldn't get back up there. Only got to 1286. Stock looks tired right now.
I totally agree with you. And pattern-wise, I'm looking at it. If I go back to late November of last year, it's starting to smell like it, and there was a kind of a similar looking top. and it went sideways for a lot, then dropped a couple of times, and then whoosh up, and then a couple months before that, same thing. But if I'm looking at Priceline, I'm looking at risk. Where is the risk? There's more risk to the downside than the upside. I mean, long term, it's a great company. They print money, but I'm not afraid of a 300-point run. So I can sell a leap in it at the 1500 level and bank 45 bucks.
Is that what
Or
it's going for? Is that the
yes,
is that the January, or what month is that?
yes, January.
It's going for
Uh,
$45 to 1500.
yes, I sold it for
Holy
I
cow,
sold
man,
it for
premium.
I sold it for $45, and just minutes later it was $43.
It's
And
gonna be It's gonna be 42 when it opens, and Dennis gets his order
Yeah,
out.
I'm going out there licking my chops. The only thing, like, you're always good because you'll sell and then you'll buy a higher one. Where I just say, it's not going that high, and I'll just sell it flat out, and then I'll get rolled over when
well,
Priceline gets bought out by Apple or something crazy.
well, what you can do is sell a strangle. Do one up there and do one in 900, and you're good. That gives you time to react.
Yeah,
In 900 put, I should say, the opposite.
so
So
go
kind
both
of like,
sides.
yeah. Or if you're scared of 1500, go to 1600. Collect $28.
$28 for the 1600 too.
You know, last time I checked, it was 27,
Wow.
25, 28, depends. So why not? You know, sell in May, go away. Heck, I'll sell in May, I'll go away.
Yeah, you go away for it.
I'll sell it up there and go away
There's
on vacation.
premium, sell the premium, but Nick's
Yeah.
careful the way he does it. Newbie Trader asked you to explain your blog on LinkedIn here.
Okay, what I say?
Are you long or you short? You long or you short, Nick?
On LinkedIn. Yeah, I did a write up on LinkedIn. I'm not in LinkedIn. I want to be. I thought it was value. I thought that it was a legitimate company, that people gave it legitimacy, and all the hard work of the last 12 months was gone. We talked about that before, and I drew a blue line on it, and the line was at 165-ish. Okay, and it way back a couple of years ago in February of 2013, it banged up against it and then broke out of it, and then went back to it a few months later in June, and then rocket ship for a few months all the way up to the high twos, 250 and 260-ish, and we were talking 300, and then consistently fell from there, and then crashed through that blue line down to the whatever the low was, 133.
Yep.
And right, and since then it's starting to chug up. I said I'm not going to touch it, because now, even though it makes more sense that we would have more upside than downside, but the only thing that was holding me back is the market in general. If we are at our all-time highs, and if there is some sort of a correction, or we're not going anywhere, LinkedIn is probably going to go down with the market, but it would be worth a long, and as a lotto, but I didn't personally take it. So yesterday I said, okay, it was looking good for a while, and then suddenly in the last couple of sessions, it hit that blue line, exactly the blue line. If you want to see the write-up on the site, it's already up there. I think it's a public write-up that anybody can see. Boom, hit that blue line of 165, 163 something, and then just fell straight down from it.
Why do
Can you throw the link in the chat when you're done there, Nick? Just so some
Yes,
people
I
in the
will
chat
do
can
that.
read that? Okay.
Yeah, I will do that, absolutely.
Why do you use
And
a blue line?
The blue line, just me, crayon analysis, man.
I always did the Jeff Mackey purple crayon. He
Yeah.
liked the purple. Remember Jeff Mackey always on Fast Money when he was out there?
Yeah,
Always
I wish they would
take your
bring it
purple
back.
crayon, connect the lines, draw it, and that's where you trade to. And I was like, you know what? That's the best advice I think I've ever gotten off of the purple crayon trick. And I was always using the wrong color of crayon. So I started using a purple crayon, and it changed everything.
The crayon analysis doesn't lie, because it reduces it simplifies everything.
Yeah.
Like, technical traders, technical analysts, hats off to them. They know all these patterns, crabs and deep crabs and all of that. I don't know all that stuff. All I know is the basics and the spirit of it. And if you do it with a crayon, you cannot be to the minute. At 2 o'clock it's going to do this, and in 3 days it's going to do that. You just take the spirit of it, and it almost never lies, because you're taking it, zooming out. You zoom out. That's the advantage of it. That's why I like to use it.
Yeah, Joel and I are the same way with our technical analysis. We try to keep it simple. We'll look at just the levels where it was before. Sometimes you can get back to those same levels. So we're looking at support, resistance, and trends. I always say, like, even when I'm teaching at Bray Trading, I always say I kind of teach my technical analysis stuff in like 5 minutes. And I literally put support, resistance, trends. That is my technical analysis. And if you
Yeah.
keep it simple like that, it's worked for me for 15 years. So it's
Yep.
when you start getting all these crazy indicators and you start really trying to extract different type of data, and that's when it all gets confusing. And you'll have people like we're looking at, I look at their chart, and I can't even tell what the price is because they have so many indicators on there. So it's just so much, mass confusion with that many indicators on your screen. If it works for you, I'm telling, if you're listening to this, if it works for you, keep doing it. Always keep doing what works for you. But if you're just starting out, if you're trying to use all these fancy indicators, it kind of sometimes just confuses everything.
Yeah. Back to LinkedIn, I know I want to answer the question. I want to be bullish because I definitely see more upside based on the technicals. I don't know a lot about the internals. I think they have a lawsuit on their hand coming down because I know they were cheating me. Cheating by in the sense of counting me as a member when I wasn't up until recently. They would send me, hey, your profile has changed. Like, I didn't even set up a profile. What the heck are you guys talking about? And then they counted me as a member for sure, and I wasn't one. So I know there's something shady going on there. So, but having said that, technically it's not looking good at all. I mean, it's got falling peaks all over the place, lower highs, lower lows. But you look at the chart and you go, how low can it go? I mean, it's back to where it's consolidated very solidly around the 125s before. So I guess if I want to take a flyer on it, I do a credit put spread, but I'll give myself some room. I won't do the weeklies, that's for sure. I'd go out in time. Let's see on the Junes if there's any premium. 27 cents at 135, 130. If somebody wants to gamble on it there and watch it closely, then that might be something to do.
Hey, Nick, I want
Or
to ask you something here about the LinkedIn, and I know Dennis and I talk a lot about highs and lows, and but what I also like to do, and it's really significant today, also in the S&Ps, is the closes in the same area because that's where you're marked, right, and your statements. That's where you're marked
Yeah.
on your margin. S&Ps made the all-time high on Friday, 2150. Made it all-time closing high by only one tick, 2175 yesterday. Now that level's acting as resistance. Looking at the LinkedIn here, do you pay a lot of significance to the closes? Because you look at take out yesterday's action, and you had 3 out of 4 closes right around that 160 level, 160.54, 44, and '09. Do you use that as like when you get one close maybe doesn't mean a lot, but if you get 3 closes in the same area, does that give is that a significant technical number for you or not?
Yeah, it is. The close obviously sets the candle. And when I look at the
Mm-hmm.
candle speaks loud. By the way, for all the listeners out there, if your charts haven't been set to candles, you should you should do it. Or at least some sort of a bar that tells you what's going on, because you look at it, you can tell what happened during the day, as opposed to the line charts. So the close is very important. So in this case, in LinkedIn's case, the 2 last candles, the close has been weak, right? The range has been big and it showed some promise, but then it fails and closes on towards the lows, and I don't like it at all. That's why technically it doesn't look as appetizing as one if you zoom out to 2 years and see, man, this is like at a close to a very legitimate. How low can it go? Then I can take a credit put spread on it because eventually it's going to be bullish. But I can't take that bet because I don't believe in the market at this level. It's not like we're gonna crash. My theory is still the same. We have room to grind up, but we don't have room to leap up. Everybody's expecting a super spike. We need a trigger for it. Well, maybe Draghi will deliver this week. So this week is very important from that standpoint. But I think, and here's my trading for this week. I said, last week the lotto ticket was, you guys know about it, and it was Twitter. This week the lotto ticket was any put spread because I have 2 things that are going to surprise to the downside. That's my lotto ticket. It's not a sure thing. It's a low probability, but it will pay decent. ECB is a lose-lose situation. If he puts in, if he delivers nothing, I think everybody's priced in something. the market's going to be disappointed. If he continues yakking about doing stuff, they're not going to take it well. If he does deliver something big, they're going to take it badly because they're going to say, whoa, what's he seeing that we're not? So I think the ECB event is going to be a lose-lose. And then for some reason, I want to say the jobs number is going to be under 100,000. So, and if that happens, look out below. So
Why do you think
I'm
that? Why do you think that?
I don't know.
You just
Just
the
a
intuition.
hunch.
How did that Twitter work out for you? I mean, you got that upgrade and it got over 35. Were you playing the weeklies on that?
It was, I don't remember how I played it, but I was more happy that the followers did it. So my call was more for them, not for me. My Twitter play, I heard you guys discussing this morning and worried about the day to day. The Twitter lotto is a long-term lotto. Do something long term and forget about it. Allocate a few $100s and say, this is just for Twitter. Somebody's going to figure it out. The lotto ticket is not done in Twitter. Do it long term. Don't worry about the now, because we don't know how they're going to make money now. I don't know how or who, but somebody should figure it out. And I'll put a few $100s into it.
Okay.
It's interesting that you say that, because actually Ethan, who from Hamsey Analytics, was on Monday, and he was saying the same thing. He's got a long-term options positions building on Twitter, because he thinks the same thing. Short-term, he doesn't, really know, but long-term, they think they're going to figure it out too. And I think Barry has been playing it from the long side as well. So if you use smart fellows playing Twitter real long out on the options side.
I have no intelligence on it short term. I have no clue how they're going to make money. How can you game it? It's just literally, you're rolling the dice for the short term and get lucky that way. Yesterday I had another lotto ticket in Yelp, but I didn't get a chance to play it. I thought it was going to get down to 65. Friday I played Yelp really nicely. It was insane. But yesterday I thought I had another chance. It was over 66 before the open, but it didn't give me a chance. It opened and went through to my goal, and it was something in the options that I saw. So speaking of options, this week, I'm not sure I'm too optimistic on the SPY unless we get the catalyst from the ECB and from the jobs. Yesterday, I put out a note on the SPY. I believe I made it public. I'll throw the link. It's an interesting note. I mean, I'm seeing this movie. We've seen this movie before, and it happened on late December of 2013, where the patterns are looking almost identical in the SPY. So, and from there, it meandered a little bit, and then we dropped a month later. So I'm not too optimistic. So I'm not afraid of shorting the SPY via credit call spreads, and I can make it even into an iron condor and collect some premium by doing something around the low 180s opposite as far as credit put spreads. So I'll settle the risk outside the band. But I'm not playing the weeklies this week. It's too violent. I don't like to do it around events, just like I don't do it around earnings. When the stock is reporting, I step out. I only do debit spreads. I don't do credit spreads, because you're just gambling.
Okay.
That's good. And it's hard to control the risk when you've got that event there too, obviously.
Yeah.
So.
You guys also mentioned Google, the Google L. It's in the sweet spot. It has room to drop a little bit, and it won't break any channels. I just want it to stop trading like a Momo. It had shades of Momo yesterday, but then it recovered. For a while it was down a little more than I expected, but it did drop down to be in the sweet spot open interest wise. So I'm not too worried about it now. It has showed a good, people are expecting buyouts and things, but I think nothing's going to come out specific. It's just going to nibble here and there. But if they do, I'm not sure they're going to punish them too harshly. So I would go out long credit put spreads on it, even sell puts and leaps on it. I wouldn't worry about it too much.
Okay. All right. We've had Nic Chahine creating income with credit spreads and option spreads. Nic, great job, great outlook on the market. Always talking about risk and always talk about reward. That's what we like to do here on Benzinga's pre-market prep. So we'll see what happens today, Nic. I want you to keep an eye on that 1914 level, the two lows from Friday and Monday, because if we take that out, I think we may come back down and test that 1900 even.
The bears have not given up the 1900 line this week in the options, so keep on the lookout for it.
Okay. All right. Thanks, Nic.
Thanks, Nic.
All right, later, guys.